Please like, share and subscribe. Reading and understanding financial statements is essential for assessing the financial health and performance of a company. Financial statements provide a snapshot of the company's financial position, profitability, and cash flow. Here are the key components and steps to help you read and understand financial statements. 1. Types of financial statements. Balance sheet shows the company's assets, liabilities, and shareholders' equity at a specific point in time. Income statement presents the company's revenues, expenses, gains, and losses over a specific period, resulting in net income or net loss. Cash flow statement highlights the inflows and outflows of cash and cash equivalents during a specific period, categorized into operating, investing, and financing activities. Statement of shareholders' equity tracks changes in shareholders' equity over a specific period, including stock issuances, repurchases, dividends, and retained earnings. 2. Balance sheet analysis. Review the assets, assess the composition and liquidity of assets such as cash, accounts receivable, inventory, and property. Pay attention to any significant changes over time. Evaluate liabilities, examine the company's short-term and long-term liabilities, including accounts payable, loans, and bonds. Assess the company's ability to meet its obligations. Analyze shareholders' equity, understand the components of shareholders' equity, including common stock, additional paid-in capital, retained earnings, and accumulated other comprehensive income. 3. Income statement analysis. Study revenue sources, analyze the company's revenue streams, identify major sources of income, and evaluate their growth or decline over time. Assess expenses, review different expense categories, such as cost of goods sold, operating expenses, and taxes. Identify any significant changes and their impact on profitability. Calculate profitability metrics, calculate key ratios such as gross profit margin, gross profit, revenue, operating profit margin, operating profit, revenue, and net profit margin, net income, revenue, to evaluate profitability. 4. Cash flow statement analysis. Operating activities, assess the cash generated or used in the company's core operations. Positive cash flow from operations indicates a healthy operating performance. Investing activities, analyze the cash flow related to investments in assets or divestments. Evaluate the impact of capital expenditures or acquisitions. Financing activities, review cash flows related to financing, such as debt issuance or repayment, stock issuances, and dividend payments. Assess the company's financing sources and capital structure. 5. Financial ratios and analysis. Liquidity ratios, evaluate the company's ability to meet short-term obligations using ratios like the current ratio, current assets, current liabilities, and the quick ratio, current assets, inventory, current liabilities. Solvency ratios, assess the company's long-term solvency using ratios like the debt-to-equity ratio, total debt, shareholders' equity, and interest coverage ratio, earnings before interest and taxes, interest expense. Profitability ratios, calculate ratios such as return on assets, net income, average total assets, and return on equity, net income, average shareholders' equity, to measure profitability. Efficiency ratios, analyze ratios like inventory turnover, cost of goods sold, average inventory, and receivables turnover, net credit sales, average accounts receivable, to assess operational efficiency. 6. Comparative analysis and industry benchmarks. Compare financial statements across multiple periods to identify trends and changes in performance. Benchmark the company's financial ratios against industry averages or competitors to assess its relative performance and identify areas of strength or weakness. Remember that financial statements alone may not provide a complete picture of a company's financial health. It's crucial to consider qualitative factors, industry-specific metrics, and other relevant information to form a